Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise. What's up, my future one percenters? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, Prince of the Stock Market. I'm with Kenny Coins. What up, man?
What up, man? It looks like this week, market came back. Heavy hitting.
Man.
You know, Andy Ruiz type. You know, Kawhi Leonard type sneaks. You know, so
that's
market
why, man,
coming.
That's why it's important to buy on some of these dips, man. Now I know.
Oh yeah, it's very important.
I know last week we were talking about, and I was talking about how it was at a level that I didn't like, where it was under the 200.
24,800. Yeah.
But the support was at 24,500.
And I told you, if it goes down to 2,400, past 2,400, you know what I mean?
Right. You thought we was going to see the 22s, 21s, the Deion Sanders.
Yeah, if it goes past it, we're going to be seeing that.
But it's important to not be scared all the time, though. And
of course.
To grab some of this stuff.
We should, like we always said, we should already have our supports and so resistant already premeditated.
Exactly.
And ready to shoot. You know what I mean? There's been a lot of opportunities since the beginning of the year until now. You ain't take them.
Right.
You ain't got nothing to tell you.
You said it on a previous podcast. I don't know which one, but the market always gives you a second chance. Always gives you another chance.
It does.
Always.
I said that. I always believed that, man, because when I first started trading, and I'll always lose, but I started picking up, like, the market for some reason always gives you a second chance to get back in, at the almost either at the exact same level you first saw it or damn near close. And you know, I truly believe that when the market went back to 21,000 that one time, I truly believe the market was giving us a second chance at the end of the year of December.
Yeah.
You know, I truly believe that the market was giving us a second chance to get back in. Now, looking at the chart, after this week, after a few more days, it look a little different. You know?
Well, these things swing, you know, day to day. You just got to be prepared for it. You know what I'm saying? And stay. I feel like me, I stay the course. Like, even though I might see it dropping, I'm like, all right, I'm gonna get rid of some of my stuff that I'm not too confident about, but I'm gonna keep my solid cats like Zillow, Teladoc, Square. You know what I'm saying? I don't dump everything.
We said this before and we'll say it again. Good stocks always come back harder.
Always.
Simple as that.
Always.
If it's a good company, it's always gonna come back where it was. Look at 08. Look at all the good companies in 08 and look at where they are now.
You can even go back to like the early 90s when they had a little crash. You know,
same thing. Good companies gonna survive. They just give you chances to get in. You know, 2008, Amazon $5. Imagine everybody got Amazon at $5. You know what I mean? What other company that was cheap? Disney, 10. You know, a lot of the gas and oil companies, 10. You know, definitely back in 2014, a lot of those gas and oil companies were low.
Yeah.
You know, Bank of America, I remember I got it at like $11, $12.
That's when they were stealing everybody's money.
Yeah, you know what I mean? I think that was Wells Fargo.
Oh, yeah, that is Wells Fargo. Yeah,
That's
my
Wells
bad.
Fargo.
That's Wells Fargo.
Bank of America was solid. You know what I mean? The only company that stayed solid was Chase. They stayed in the 50 range. You know what I mean?
I really don't mess with the banks that much, so I don't really follow them. But I was following Wells Fargo when they dropped, though.
Yeah, Wells Fargo should have dropped all the way to $2, man, for how much money they stole. But it's true, man. The market gives you second chances, and you just gotta stay focused and take the opportunities when they give it to you, because there's levels that we're never gonna see again. I'm gonna tell you 10,000 on the Dow, you're never gonna see it.
I mean, that's easy to say.
Yo, if we ever see 10,000 on the Dow again, we in trouble. Just letting you know. Just letting you know, we not only in trouble, man. The world is coming to an end, bro.
Yeah, we didn't got nuked or something like that.
Yeah, yo, companies ain't making money. World ain't moving. You don't want to see that. No, you don't want to see that. But, man, I don't think we ever gonna see. I know we gonna see. I don't want to say that, but man, I was really hoping to get to 3,000 before the S&P to get to 3,000 before I don't think it's gonna happen before the end of the summer, but. Anything's possible, like KD said. Kevin
Durant. Not Kevin Durant, but Kevin Garnett. Kevin Garnett.
Yeah, he said that. KG. But man, so
you know who's not coming back though? You know who you don't have second chance on? GameStop. Yeah.
Oh, that's over.
It's over. Now
I said that when I read the article. Google came out with their own gaming system.
Well, if we go back, right? I told everybody they dividend when it started dropping from the 30s. I think their dividend got up to something like 12%. It was up to like 12% payout. They were still paying it actually, but they could not. I knew you just know they can't sustain it. You can't sustain that kind of dividend. So as the stock drops, the dividend payout increases. And so what they were eventually gonna have to do, it was just common sense. They're gonna have to cut the dividend or stop paying it. What did they do? Stop paying it. What did the stock do? Tanked.
Drop some more.
Now I'm mad at myself because
we called this about a year and a half ago.
Man, it's been about 2 years. You can see it was easy. You can see it, but I'm mad at myself because I had $10 puts for October. I had bought them. Man, I forgot. It was a couple months ago. I had bought them, and I ended up selling them. I think I bought them when they were like $15. GameStop $15, and I ended up selling them when GameStop went down to like $11. And I forgot how much profit I made. It was a pretty good profit, but I wish I would have kept it because right now it's at like $5. You know what I'm saying? So I'd be really. I took a look at those those $10 puts before we actually hopped on here. They were $500 per contract. I think I had 18 contracts.
Jeez.
Just imagine if I would have kept that, man. We playing the what if game right now. Imagine if I would have kept that.
502?
Yeah.
Yo.
And I think I got them for something like.
I think I got something like 60. Different host.
Yeah. I think I got them for under 100. You know what I'm saying? I forgot how much. It wasn't 100 though. Let's just call it 100. That's a 500% gain.
Yo. But nah, man, it's crazy. You know what I was thinking about GameStop and the whole Google thing coming out with their own system and already have EA, 2K, and different games on board. Is the fact that people you can see this coming, and back in 2017, it was in the 40s, 30s range, whatever. There's no way GameStop was going to survive. Unless 10 years ago they started making games.
Consoles. Right when they started to move toward that streaming platform. Right when people start, not streaming, but right when people start to do the downloadable games and stuff. Really, right when right when people started to get smart and like, yo, man, I'm not trading in my games no more. getting shortchanged. That was started to be the end, but you can still see GameStop still hanging around in that 2013-14 area because the future for downloadable games, it was just starting, but it wasn't that bright. But then once it became real bright, PS4 started to take off, Xbox One and all that, it was over. You know what I'm saying?
Yeah. No, the truth is, I would have started back when doing it back when Xbox 360, if I was GameStop.
Right. Yeah.
When Xbox 360 came out, and they weren't selling games, but they were selling add-ons to games.
Yeah. Right. I forgot the downloadable content. That should have came clear to you. If they can start downloading content to existing games, and all you have to do is pay $199, $299 for it. Don't you think in the near future somebody's gonna figure out how to download a whole game? Yeah, they had a future outlook problem. Well, you know what? I don't think they had a future outlook problem. GameStop was in a position they could not do nothing about it because they don't own. They
actually could. They actually could. This is a blockbuster story all over again.
I don't agree with you there because GameStop don't own nothing.
I'll explain it to you how it's a blockbuster story all over again. Here I'll explain to you. GameStop had an opportunity between 2007 and 2012 to come up with something that they're just like JCPenney's, they're just like Blockbuster, just like Macy's, they didn't do anything. It's just like you making $1 million every year, and you think then you think one day you think how to say it, like it's gonna keep happening forever.
Right. It's not. Right. Yeah. You gotta have a plan for the future.
You know what I mean? Times change. You make $10 million for 7 years, there's no guarantee you're gonna make it for another 7. That's why you open another stream of income, because it's like everything else. One stream of income is the time is going to run out. You can't play professional basketball forever.
I feel you right there, because if you look at I remember 2011, 12, maybe 13, Best Buy was having a rough time, and then they changed their whole business model. They did the whole buy online, pick up in the store. They started to do. They opened up a little Apple store in Best Buy stores. They started doing
T-Mobiles are doing services.
Right.
Yo, you gotta change. You know what I mean? The reason why I'm saying GameStop and Blockbuster are the same. First of all, they both sold discs. You can return the disc. You know what I mean? Even though their models were different, but the results were the same. They all got beat out by streaming services.
Yeah. But to me,
that's why
I can't put 100% fault on GameStop. The reason why I can't is because GameStop doesn't own anything. They don't. They could try to do something for the future, but as far as with video games, they had no control. You know what I'm saying?
That's what I was trying to say. They could have easily during the time got something, invented a gaming system, got with Google, got with something, formed a partnership.
Yeah.
You know what I mean? Maybe change their whole. Maybe start buying some building and change the whole thing to virtual reality.
Right, yeah.
They could have done a ton of things. They could have changed to GameStop, turning GameStop virtual reality.
They probably should have hired you.
I'm just saying, man. They were making, GameStop at one point was $60 a share, so they was making money.
Right, yeah.
So there was no way that at this point, you can't say GameStop didn't make a ton of money.
They were positioned to do something about it, at least come up with an idea. Now, if the idea would have failed, you live with that. But they had no ideas. They had no ideas for the future.
To me, GameStop had plenty of time to really just make as much money as possible. They IPO since like 2002.
Yeah, early 2000s.
You know what I mean? They had plenty of time to really just change the game. They could have slowly, when they started seeing streaming coming, they could have easily went to virtual reality, start doing virtual reality, put some money into that, change their stores to virtual reality stores, have people come in and out, create that traffic.
Yeah. And
You
still
know what
at
I
the
mean?
same time, still do something with video games while it's hanging
Still do
on.
something with video games. You know what I mean? Sell the consoles. You know what I mean? Do that stuff. Change the idea. I believe. You know what? I believe GameStop could still be saved. Now
Oh,
thinking
I
about it.
can't. Now, I don't. Oh my goodness, I ain't even
I
getting
know
started on that.
it's a stretch. It's a reach. It's a reach. I might be reaching too far, and you guys might call a tech on me. It's a reach. But I'm saying is GameStop could partner up with a virtual reality or augmented reality and change all the stores to augmented reality where people are coming in and playing the games or going to game developing.
Yeah, I feel you.
Dude,
I feel you right there. I just think that they don't have the. I don't think they have the money anymore. They don't have the money to do it.
I'm not, bro. They could shut down some stores. They can figure out something. You know what I mean? They could shut down some stores. They could figure out something. You know what I mean? GameStop could do something to figure out to save the company. To me, I feel like if they're not trying to do that, to me, keep going with the old model is not helping them.
Yeah. To me, I feel what you're saying, and to them, to their credit, I don't think it would hurt for them to try. I just don't think that they can. I think that they're looking at it like, well, we just hanging. They in that hope stage right now. They just hoping something happen and they can hang on.
All I'm saying, GameStop has 7,500 stores worldwide. Shut down 5,000.
I was about to say, yeah, you need to cut down more than half of those stores.
Yeah, shut down 5,000 of them. To recoup all that money. That's at least a couple million, maybe 10, 15. Put it somewhere else. You know what I mean? GameStop, we helping you make money.
Cut the check. Cut
the check.
I know you don't have too much money to cut for us.
You know?
give us a console or so. Give us a PlayStation Pro or something like that.
Yeah, cut the check. GameStop been around for 35 years, man. This could have been easily saved. You know what I mean? This could be easily.
All they had to do,
GameStop could have been easily.
All
saved.
they had to do was come to Marathon Money and say, "Yo, help us." That's all they had to do. That's all they had to do. All we wanted was a PlayStation Pro. That was it.
That's it.
We would you be profiting right now, but
That's
no, y'all were stubborn.
You know what I mean? To me, GameStop could have easily. They've been around 35 years. They could have easily adapted, turn their storefront into virtual reality.
I remember
back to the arcade days.
Yeah, I remember one of our other podcasts, maybe last year, you were talking about they could have done the what are they doing right now with the arenas? When people are playing esports, they could have done esports in the stores and stuff like that.
Yeah, they could have held challenges. They could have done. They could have changed their whole model. Remember back in the arcade days where you come in, the only way you could play video games, you went to the arcade.
Yeah.
The only way you can play real virtual reality games is you go to the store.
Yep, go to the store.
You know what I mean? We're literally taking an arcade model and added it to a futuristic model. GameStop could have easily revamped their whole thing, still sell games, but revamp their stores.
Man, staying on GameStop, but kind of going off of it a little bit.
No,
we got. It was so easy to figure this out, like they were gonna drop. You know what I'm saying? So the warning sign, I guess we got to hit people to the warning signs of, hey, how you gonna take advantage of this sure thing? Like something's gonna drop, you grab puts. I think that if you see a company in danger,
they're not changing their ways,
and they're already dropping, the dividends getting out of hand, like the dividend percentage. If a company's losing money and their dividend is above like 5%, then you could probably be like, all right, I'm gonna grab some puts. Because they can't.
100% right.
They can't sustain that and when the stock is dropping, because as the stock drops, the dividend payout increases. So and they can't pay that. They can't pay that.
Yeah, you 100% right.
Right now, I think if my bad. If GameStop would have paid this dividend this quarter, that would have been a 30% dividend. They would have been paying out 30% of their cash just in dividends. they cannot lose that amount of money.
No, they're barely surviving.
And then right when you announce, hey, we ain't paying dividends, bang, crash. Get your money. And that's, I sold my puts too early, but I had the right idea though. But
you know what I mean? Like me and Cam came up with criteria.
Right, yeah.
There is criteria to figuring out if a company and their stock is gonna fall. Because we've done this several times. There was another company and their dividends was extremely high.
It was a couple of them that we call. I mean, Sears. Sears. They used to have a dividend.
We called that at $20.
We weren't on the podcast at the time, but Radio Shack. I remember talking about Radio Shack with Extra. They were like $10. I'm like, yo, they ain't gonna survive. They went basically from like $10 to $2. American Apparel. They didn't pay a dividend.
JCPenney's.
Right,
JCPenney, Sears, that was on the podcast.
Macy's,
Gamestop.
even though I think Macy's is kind of hanging on a little bit, but Macy's also.
I don't even know how they paying that leader they keep giving money to. Sears is on the pink sheets now.
Yeah, I can't.
Remember when I told you that?
Yeah, I'm surprised that they're even like still a name. That name should be illegal.
Dude,
you know what I'm saying?
Remember that? Remember when I first told you Sears is at 75 cents?
I can't remember, but I know. I just know that they.
I'm looking at Sears' whole chart, and I'm just saying $130, man.
Right? Yeah.
The fall to 38 cents. The fall from grace.
Yeah, you gotta. If you trying to make some for sure money on like a stock going down, just look at some of these people that's not changing their ways, that's not adapting
that's really it.
To the future.
That's really it.
And you got to get those aren't like weekly plays. You don't get puts like 7-8. You get puts like a year out, 2 years out, because it's gonna take them a while for that to keep dropping. But when it starts dropping, it accelerates. You know what I'm saying?
Because we've been talking about this for a while. JCPenney, Sears, JCPenney, we had talked about since like when it was at $40. You know what I mean? On the podcast it was more 20, but it's on the fact that it's 99 cents now. It's unbelievable.
Yeah.
That a Goliath like JCPenney, Sears, where their market cap is literally crawling under 40 cents. JCPenney is on its way to the pink sheets.
Yeah, Sears already there.
Sears been there for a couple months. It's what's crazy is that these companies used to be worth billions and billions of dollars.
Super billion. I'm looking at Macy's right now, $20.43. On the year, I'm only looking at the year chart. The high was $41.99. They lost 50% in a matter of, that was September of 18. In what, 6-7 months, lost 50%. Even though I don't think Macy's is kind of behind a little bit. I just think that they just suffering that retail doom. You know what I'm saying?
And I don't feel like Macy's really doing anything on the internet to really.
They're not doing nothing that nobody else is doing,
Yeah. You know what I mean? So it's still a put you can put on Macy's.
Yeah.
Honestly, to tell you the truth, there's still a put. You got to look at the market and you got to look at these retail giants and you got to say, like, how are you still going down when the market's still going up?
Yeah, that's a big red flag right there. That's a huge red flag.
And the market this whole week went up, and like I look, you know what I mean? You can see it coming now. The 3 black cows. I love them. You know what I mean? But the thing is that there's still Macy's is one of those things I will put a put on, and I'll be looking to put a put on because I just don't see Macy's recovering.
Right. Well, they at like all-time lows right now. I think that you could possibly wait.
They're gonna be at all-time lows until they get reach under $1. Mate, you know what I mean? I truly believe Macy's. Matter of fact, their dividend yield is 8%.
That's too high. That's one. I didn't see the dividend yield.
That's one criteria.
Too high.
We're giving you one criteria. Number two, they have failed over 50%.
Yeah, since
52.
September.
Yeah. You know what I mean? That's huge. It's huge. You got to look at it.
So that's another one. They're gonna end up cutting the dividend. They're gonna have to cut it, or they have to cut it or not pay it. I don't think that. I think it's too early for them to be like, hey, we're not paying the dividend, but they might slash it.
Once they get to $12, once they get to $12, $13, and the dividend's almost 12%.
At $12, $13, that dividend's gonna be more than that. The dividend's gonna be like somewhere around 15.
Okay, 15%. You know what I mean? I'm just gonna let you know they're not gonna pay it. And the moment they don't pay it, it's gonna be a wrap.
Yeah, they're gonna look. It's gonna look just like GameStop just looked this week. That's what it's gonna look like. They're gonna go from like this $20 range, probably the high teens, immediately to the tens.
Yeah, I just can't see Macy's. The only way I see Macy's get bought out by. See, the thing about it, Macy's bought all their places too.
Mm-hmm. I think Macy's isn't in the exact same boat as like JCPenney, GameStop and stuff, but you can see it though. The dividend's too high, stock going down when the market's going up. You know, too much retail competition. I mean, honestly, man, we giving everybody this free game, man. We giving them the game. But y'all got to take the steps. Y'all got to take the steps to get this money. We giving you the game, giving it to you.
You know what I mean? We giving it to you. We giving it to you, and we giving it to you again. You know, it's the truth is, the thing about it, times change every 15 years. The fact that we got this idea that companies are too big to fail. 10 years ago. 10, 15 years ago, Macy's, JCPenney, Sears were too big to fail.
Yeah, right. That was a thing. You know,
know what I mean?
Too big to fail.
It was way too big to fail.
GE, too big to fail. You know, now
a small guy, his dad is from Cuba, came over here to America. Jeff Bezos said, "We're gonna take you out." There you go. You're gone.
Actually, Jeff Bezos didn't say that. The companies took themselves out. Jeff Bezos would have sold himself.
No, I'm not saying,
Jeff Bezos would have sold himself to anybody.
You know what I mean? There's just the fact that, you know, a small idea of selling books is now the demise of JCPenney, Sears.
Yeah,
GameStop.
a lot of different companies. A lot.
You know what I mean? Macy's.
Let's go back to GameStop real quick. Look at Amazon. I can buy digital content on Amazon and download it on my Xbox or PlayStation. Why can't GameStop do that? I think they do it. I think they started, but it's too late. You're too late.
It's too late. The only way I can see GameStop being saved is to go back to an arcade type and dominate that space.
I feel you right there.
That's the only way, and that's a maybe. That's if they have the cash. You know what I mean? If you have the cash, GameStop right now, go ahead. Change. You already got the retail space, so that's one money you don't have to spend. So you just got to spend money on equipment.
Right.
You know what I mean? And I would, on top of that, I would start developing VR games.
Yeah. Yep. I mean, you got the right idea. They need to cut that. They need to cut that check for real.
They need to cut. First of all, they need to cut me a check, and they need to cut their losses.
Yeah.
Yo, what that lady said? What that lady said, Kim, when she came on here? You gotta kick him out like a bad husband, bro. Cut your losses. You know what I mean? Cut your losses. It's time.
They need to cut the check and cut their losses.
Yeah, man. It's time. It's time.
A double cut. Oh man. Real quick before we hop off, because we button up against the 30-minute mark. We got to pat ourselves on the back. We sold DocuSign at the right time.
Oh, yes.
We sold DocuSign at the right. How did we? I'm getting tired of giving people the game. We're giving them the game. We're giving them the game. Oh my goodness. they dropped.
Man,
They
I didn't
dropped.
have really good faith in DocuSign. You know what I mean?
You never did. I did, but we still made profit on them.
Oh, we still made profit. I just never had real good faith in them. And you know what I mean? It wasn't because they're a bad company. It was just the same fact that I feel like their whole business model could be easily imitated. And once people get the wind of it, once the patent's over, there's gonna be a whole bunch of companies coming out. DocuSign this, DocuSign that. You know what I mean? I don't feel like they got anything special. It's just like Netflix. It took me a while to realize that, but Netflix can be easily imitated. And once people realize they can easily how to imitate it, sometimes the biggest part is about figuring it out. Once you figure it out, the things can be easily imitated. You 100% right about Netflix. Netflix is gonna have a problem in 10 years.
Yeah, they have a big problem.
Yeah, they're gonna have a big problem because everything they do could be easily imitated. The only way Netflix is gonna survive now is straight on their content.
Right. They have to become NBC, CBS. You know what I'm saying?
Yep.
They have to become someone.
Yeah, that's becoming. I think Hulu was smart to not go IPO.
Yeah.
Hulu was smart not to go IPO. I think Hulu got the game where they said, you know what, let's start off with commercials.
Yeah.
You know what I mean? And I think Hulu, when they do go IPO, I think they're gonna be a big player.
No, Hulu ain't never going IPO because Hulu's own Disney bought basically everything in Hulu. So Hulu is Disney.
Oh, smack. Never mind. I didn't even know that.
Yeah, Hulu's Disney.
Oh yeah. Whoever sold to
Fox.
Oh, that was a good check.
Fox had a stake. Fox just sold the rest of their stake to Disney, and then Disney bought out all the other smaller private guys. So Disney owns something like 96% of Hulu.
Yeah, you know what I mean? If Disney told me I want to buy the rest of your content, I'm signing that check over.
Just give me
because
that.
Which
give
one,
me that
who, you know, because the truth is Disney's one of those people is just like, okay, you don't want to sell it to me? All right.
I'll just create competition. You got just like Snapchat and Facebook. Snapchat didn't want to sell to Facebook. Like, okay, I'll just create
it. The truth is every good business owner, every good executive team, they don't want to go out and recreate when they could just buy it.
Right.
Nobody wants to do that. You know what I mean? If there's something that's already making money, people's already using, you know what I mean? Let me go buy it and work on that platform, make it better. You know what I mean? If I have to, I will. But if I don't have to and I have the capital, I will buy it. That's how big corporations think. That's really how real good money is made. But hey, Snapchat, you taking that
L. Make sure you follow us. You can follow me on Twitter, Instagram, anything at Camboni11, CAMBONI11. Follow us on Spotify. Look for Marathon Money. Also, we giving you that free game. So you making some money on this free game. Support us. You can Cash App. Any amount of support to Marathon Money. Cash tag Marathon Money. Join our Facebook group, everything, man. Kenny, what's up? Where can they find you?
No, man. Twitter handle, Kendrick Collin, 2 N's in the middle. Kenny Collin 23 on Instagram. You can always hit me on Marathon Money Facebook page and the messaging group. If you want to join the messaging group, just hit us up. You know what I mean? Go ahead and support us on the Cash App. Cam, you want to tell them about the app?
Oh yeah, we're gonna have the Marathon Money app coming out real soon. Which what we're gonna be doing is we're gonna have our quarterly plays on there, so you guys can get real time updates when we in and out. So there's better accuracy on some of the pricing, where we hitting in and out points. Also, we got a Wincrease app coming out pretty soon. It's just gonna be some of the content that we have on the website. You're gonna be able to get push notifications on certain option plays and things like that. So we coming up a little bit. The biggest thing though, we getting that money, and GameStop.
That's the whole goal.
GameStop, you need to cut that check.
Cut that check.
Cut that check. Go ahead, GameStop. Go ahead and do what we said. And then if you have to bring us on, that's also gonna come with a $200K salary.
Right. We willing to help you out, GameStop. We willing to help you out.
We willing to help you out, man. We just gotta make the changes. There's gotta be some changes that gotta be made.
Yeah. So
all right.
Peace.
Peace.